Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Good afternoon, everybody. So I'm just going to start right in on it. What you're looking at is the daily chart. I have Bitcoin on top, I have the S&P 500 in the middle, and I have a comparison chart between both Bitcoin and the S&P 500. So wherever our date starts, they essentially start at 0, and then it'll go up and down whatever percent from that starting point. So what I'm interested to see, the blue line represents the S&P 500 and the orange line is Bitcoin. So you can see that Bitcoin since August of 2021, Bitcoin has lost 61%, S&P 500 has lost 20%. But if I kind of zoom in on, you can kind of see our chart where we were kind of at our highs. So if I zoom in just a little bit, everything will kind of zoom in together. And from the peak of Bitcoin's price, this is way up here. This is our most recent high up here at like 65 or 69,000, somewhere in there. Bitcoin's tumbled a lot from there, down 71%. In the same time, S&P 500's been down 23.71%. So now I'm going to scroll forward to the top of the S&P. So that would have been January 4th. And so from about January 4th, this is when S&P dropped really fast. So Bitcoin and the S&P were actually pretty parallel, and it was only during May when Bitcoin kind of had this couple of really sharp moves down that Bitcoin moved further away. But you can kind of see that on the whole, as long as we're not dealing with amazingly out of control factors, the shape and slope of these returns are pretty similar. So I'm going to zoom in even more to kind of capture the moment that Bitcoin hit its bottom. So the S&P sort of hit a bottom and Bitcoin hit a bottom. They both happened very close to the same time frame. So I'm just going to zoom into that exact moment. And what do we find? We find that the research that I had done before, comparing the S&P and Bitcoin, I assumed that Bitcoin was moving about twice or 3 times as strongly as the S&P. Well, that is not necessarily the case. It was the case with those outliers, with those big drops. But if I line it up to where we're pretty close to the bottom of our market in both cases, you can see that they are pretty close. So that this point here, July 7th, it wouldn't have mattered whether you had invested in the S&P or Bitcoin. You'd have had the same return. Here, your Bitcoin return would have been slightly better. Here, the S&P would have been slightly better. Bitcoin, S&P, they're going back and forth. We had a little bit of a difference when Bitcoin had these couple of shocks to the system. This move up, this move down, and this move down. So that kind of threw us off. But our difference is S&P down 2.43% at today's close, and Bitcoin at negative 6.82. So they are fairly close. I mean, this is pretty close over the period of this is 3 months worth of history, and have Bitcoin and the S&P only different by about 4.5 or 4% is pretty remarkable. So it's interesting to think that it used to be that all of the Wall Street guys and people in government and things like that would always point at Bitcoin and saying, oh, this isn't a viable option because Bitcoin's so volatile. If you tried to buy coffee, it'll be twice as much or half as much the next day. Well, if there was a way to tokenize the S&P 500 in the last 3 months, you would have, if you were to pay with an equivalent token of the S&P 500, you'd have dealt with the same ups and downs as Bitcoin. So that tells you something. I mean, it's kind of amazing. You can see how the market has matured a lot. Bitcoin is definitely quite different than it used to be back in the day. So when the S&P becomes as volatile or equally volatile to Bitcoin, it is, things are starting to change. And what does that do? It actually strengthens the case for Bitcoin. Okay, now I'm going to actually go intraday. I'm going to look at the 1 minute chart, and I just want to look at the day's activity, and I'm going to pull it back so we can kind of see how things are going. So it's 13:30 UTC that the S&P starts. So it's been kind of a wild day. Okay, perfect. So, yeah, okay, perfect. Everything's lining up. So Bitcoin started off stronger, and then the S&P was stronger. And then at about, 2 hours into trading, or 1 hour into trading, they started splitting. And the S&P started running, and Bitcoin lagged behind. And so it didn't go up as much. And you can see that by the distance between the price action over the 200-minute moving average, since I'm on the 1 minute chart. And so it kind of got about there until this breakoff point, and then the S&P outpaced Bitcoin on the way down, and Bitcoin had a little bit more strength at the end. So the difference was the S&P lost 0.2% and Bitcoin lost 0.56 during the trading day. So when you compare that to the end of day, yesterday's close, the S&P closed down 0.63%. Bitcoin's still live for another 2 hours, and we're currently down 0.53. So we're really in tandem. It's making my kind of hypothesis about watching the S&P. It's strengthening the case. So if we find strength in the S&P, then we'll find strength in Bitcoin. And if we find weakness in the S&P, we're going to find weakness in Bitcoin. And that's definitely the takeaway from all of this. It's just amazing to me how everything is moving in complete unison. When one goes up, the other one goes up. When one goes down, the other goes down. And even intraday, when there's a spread, there's almost a return to the mean. It's almost like you could create a hedge fund out of something like this. Anyway, all right, so let's go back to the daily and look at a little bit of the price action. So, well, let's actually look at the S&P really quick. So the one thing that is interesting, the S&P, it's an old style of trading. The S&P has kind of been milked to death. A lot of signals or candlestick signals and other things. It's gone through these iterations of, if you see a certain signal, it should mean one thing. But then people are creating derivatives of those signals, and they're going, well, if I see this, it should do this, and because I think the people are going to do this reaction to that signal, I'm going to do something different to capitalize on their reaction. And you get several reactions down the chain, and it becomes this game of chess. And so sometimes the S&P will show a signal, and it won't really follow the rules very well. And it's because people have figured out what to expect when a rule happens, and so they'll trade against the rule to kind of trick people out of their position. It's it's a little bit more complex. That's why I don't really read the chart in the S&P as much as I do Bitcoin, because Bitcoin's a little newer. It's a little bit more innocent. When you see chart formations and things, it's got a higher probability of playing out. But there are some things that you can point to. I mean, look at this green close down here. We had a pretty significant move down, and we have this doji candle at the very bottom, and it signaled a reversal, and it helped move us to to a new high. If I was to look at this chart, I would have called this a top candle. I would have called this a top candle, and certainly this would have been a top candle. So I'm just trying to pick it out, but you can see how it didn't necessarily follow the rules. It's kind of got a little bit of a mind of its own, and so it's hard to just take things at face value on the S&P. But if I wasn't, if I was just a naive trader looking at simple candlesticks in the S&P, I would call this a bottoming candle. So today's close, this doji that kind of had quite a lot of indecision, is the type of candle I would see or expect to see near a bottom or at a bottom. And to go with that, I did update my data on this, on my AI stuff here, and I had to exclude this top line data because it said that yesterday was as close as it got, and we can't use that data point. So I've moved everything down and grabbed the top 10, that's essentially 2 through 11. But you can see that 0.17 as a calculation variance, we're getting a little bit less accurate. But it is also interesting that we've had three days where I've let the AI do the talking, and it says on average we should see things picking up the latter half of the week. And so a week, so 5 days on this data is essentially a week. So I've been pointing at 8 and 13 as the 1 to 2 week, but really it's 1.5 to almost 2.5 or 3 weeks away. So about 2 to 3 weeks from the beginning of this experiment, we would expect that we would see some relief in these charts. And it was interesting watching the price action today, because during the day we were really it was actually going really well. And it looked like it was going to follow our AI really well. And so we just kind of wimped out at the end. But it's interesting to see, and it's fascinating that a move this strongly with a little bit of a hiccup here, that 3 days in a row we're showing that about 2 to 3 weeks from now we should be decently higher than prices today. I'm curious to see if that plays out. Okay, let's go look at Bitcoin. So Bitcoin, on the other hand, is showing, we still have to go through an hour and 45 minutes, so you can't even really read into this, but if we close around here, this could be a bottoming candle as well. But I noticed that yesterday we definitely lost our little support line. I kind of said that we have this giant descending resistance and this tiny little support that could possibly be something, but it got eaten pretty fast. So this is no longer relevant to our trading. and it really is coming down to this corner. So I don't know. If I take a step back and look at this chart, this looks like a horrible descending triangle. And a descending triangle will break to the downside in a major way. So there's no way to sugarcoat that. Just looking at this from a distance, that's exactly what this chart looks like. Of course, a responsible trader won't make a move until a close and confirmation on the bottom side of this support here. But it can break out either way. And I've looked at a lot of different thoughts and ideas and indicators, other traders, just kind of getting a consensus. There are quite a few that think that we have broken out of this. Somehow their line ended up on this side of this downward move, but I couldn't reproduce that. I don't know how they got that figure. But as far as this moves goes, we're in kind of a crucial point. We definitely have lower lows, and we have sort of a flattening of the bottom. So it's not looking great. Let me just put it that way. Our AI stuff thinks that in 2 to 3 weeks we'll actually be significantly higher, and if so, it would be a break outside of here, and it would probably be a higher high than this. So it would kind of project a lot of strength. So we'll have to kind of see it to believe it, though, because looking at what we're given, this is not looking very strong. But I did want to talk a little bit about this. So I've been thinking about the global economy. Now that we have to worry about the global economy more, this is pretty choppy. It's just interesting how during the course of our most recent threats of a bear market, with the COVID crash and all of that, the government decided to, or the central banks decided to just print and hand out money like crazy to everybody. And during a time when we'd have normally seen a recession, we instead saw this giant growth. And now it's time to pay the piper. So we are dealing with inflation and other challenges. The complexities that I've been thinking about are that if unemployment goes up, then they will ease the increases of rates. So they're raising interest rates to curb inflation, but they will likely slow down and be less aggressive if unemployment starts going up. Well, unemployment dropped, and that's why that's why we had some of these most recent downturns. But one of the unusual effects of this kind of soup of economic problems is that the dollar has become this extremely strong asset in the world. People want to be in cash, and not just any cash, but the US dollar instead of bonds. They want to be in the dollar instead of stocks. They want to be in the dollar versus almost everything else. They're running away from other assets and trying to find safety in the US dollar. Well, because the United States is doing things to strengthen its position and raise interest rates and things like this to get ahead of inflation and strengthen the currency, it has actually affected the other currencies in the world. And I have a couple of charts for you to look at. This is the euro versus the dollar. So it hasn't been recent. When we're looking at the S&P, so let me just go back to that. You can kind of see that the S&P started dropping January of this year, and that was sort of the peak. Well, if I go to the euro, it peaked out back January of 2021. So it was actually in decline against the dollar for about a year. And this most likely had to do with COVID and all of that. But if I line up with where the US economy struggled, the euro accelerated. So the euro dropping even faster happened since the US economy's weakened. And so now let's look at Great British Pound. It actually didn't do too bad. But beginning of the year, once the US economy and therefore, the ripple effect to other economies, the other economies are struggling worse than the United States. And so the Great British Pound has dropped a lot versus the dollar. Japanese yen, same story, and this one again from 2021. And finally, I'm using Chinese yuan because China is sort of the other global superpower as far as the economy goes. And this is going to look a little more pronounced than it should because this move isn't as intense. We're at 15 cents down to 14 cents. So the scale is just thinner. But still, it's definitely a weakening of the yuan versus the dollar. So the dollar has become the world's greatest, strongest asset right now. And there are when I heard the news that the United Nations was asking the Federal Reserve to stop raising interest rates and stop being so aggressive with, strengthening the dollar and curbing inflation and things because it's wrecking the rest of the world, they're pointing to the weakening of all these other currencies as a result. So now with that information, let's look back at our S&P. So the S&P represents the top 500 companies in the United States that, and it essentially shows their strength or the expectation of their strength. So if the US economy is weakening, we can see a trend that the expectations of profitability, growth, revenue, bottom line, everything having to do with these main 500 companies, their expectations are that they will be inhibited, that they will be hampered in their ability to grow. And a lot of this has to do with the increase in the interest rates. Because how do companies expand? How do they essentially operate? Most often they operate by borrowing money. And if they don't have access to capital and they don't have the ability to get capital to expand, then they shrink. And in some cases, they've already taken out a lot of loans and they have to refinance those loans, or they could be adjustable. And when interest rates go up, it's hampering their bottom line. And so raising these interest rates, it all comes back to the ability and the cost of raising capital. And when companies have a more difficult time getting capital, or if their capital is expensive, it reduces their bottom line, it impacts their hiring decisions, and it slows the economy. And by slowing the economy and by reducing the amount of transactions in the world, that stops inflation. And that's what the Federal Reserve is trying to do. So now we go back to the story of the United States having the strongest currency against the rest of the world. The top 500 companies in the United States likely have the ability to source goods and services anywhere in the world. And if the dollar is extremely strong, they can buy their goods and services for a cheaper price. So even though capital is more expensive, the silver lining is they actually could be more profitable if they're renegotiating or buying goods at a lower price. And I think I've seen reports throughout the economy that many of these companies actually have too much inventory. And so that's a problem. And so if they can get inventory cheaper, they can potentially be more profitable. Of course, when the economy slows, the customer base is going to be drying up. They're not going to be buying as much. But there's a little bit more of a push and pull involved in this than the economy is immediately slowing. That little bit of, how does the strengthening dollar impact the profitability of these? I haven't seen much conversation around that, but I think that can. I think it can lower a little bit of the intensity of at least the U.S. markets, because that's what we're looking at on the S&P. So just a lot to think about. I've definitely been kind of going over some of these scenarios in my mind, wondering, how things will eventually play out. But inflation is a major problem, and raising interest rates works because it makes capital more expensive, and people stop turning the dollar over faster. The what do you call that? I forget the term for it, but it's just the number of times the dollar is re-released out into the economy. And it stops when people stop borrowing, because banks would lend out every dollar. When you borrow money, you put it in the bank, or you give it to somebody else and they put it in their bank. And then that bank's trying to send that out again and re-loan it out as many times as they can. Well, that whole cycle stops if nobody's borrowing. And that's why raising interest rates slows the borrowing, and it reduces inflation, because that same dollar can't be spent 10 times. It stops when people stop borrowing. So there are a lot of factors here at play, and I didn't think that being a Bitcoin trader, where I've been accustomed to just looking at charts and signals and trends, I didn't think it was going to be necessary for me to be a global economist. But apparently all the Bitcoiners now have to be knee deep in the old world, which is pretty lame, I have to say. But Bitcoin is full of surprises. It follows to a T until it needs, until these strange things happen, where the market's selling off and Bitcoin finds strength somehow. And I think there's plenty of surprises to be had. So I have a hard time making a move or changing my direction when there's so much, there's a lot at play. Next thing, I just wanted to briefly look at Ethereum. So Ethereum has been in this, I'm calling it a bear flag, because we have gone down and we have raised. This is definitely a bear flag. And so I'll be very interested to see how our close happens in an hour and a half, because that's not looking very pretty. So bear flag on Ethereum, that will definitely impact the rest of the markets. When the prices were mixed, our altcoins were pretty mixed. There were a handful that got excited, that were 5 and 10% up, and so you can see how the market, at least the altcoin market, is hungry for a bounce. And so if we could give ourselves a little bit of a break from the normal macro events that are impacting Bitcoin, and therefore Ethereum, a lot of these others there are some that just really want to go, and you can feel that coming out of these chart formations. So anyway, we're going to continue to look at our kind of our AI that we've developed here, and it just feels like we're now coming up on indications that we might have a little bit of upward movement. So far, we have tracked closer to the minimum. So our worst case scenario is playing out a little bit more than our average case. But every time I rerun this and get new data from another experience that's very similar to our most recent S&P formation in the last 55 days, it's showing that there should be relief. Like there's not even a single negative on any of the averages across the board. And so in a normal situation, we would start seeing some relief. I'm very, very curious to see if it plays out, because if I was just looking at the S&P, listening to the news and all the horrible things that are happening, seeing that we had an intraday at the lowest price that we've seen for since November of 2020. There's a lot of bad news out there, and so this AI is going kind of flying a little bit in the face of that, and so it'll be interesting to see if it plays out or not. But the numbers say that there should be relief, and the S&P likes to make less sense than a normal chart. If this was Bitcoin, I would say, oh crap, we're losing momentum big time. We're about to break through this. But with the S&P, I can't always take that to the bank. So we'll look forward for more days and more closes, and we'll see how it goes. Just a heads up, I am traveling the next couple of days, all the way through Saturday. So I may not have a video coming out the rest of this week. I will be doing my pro video every day. It might be late by the time we get to hotels and different things, but I'll continue to update the pro channel with my thoughts and things. But this channel I don't think there'll be much out. Worst case, it'll be Monday before I get out another video. So just a heads up. All right, everyone, stay level-headed and do your best to navigate these times. There's a lot of unknowns, and we just have to kind of be smart, keep our position size small, make sure that we're not making emotional decisions, make sure that we can back up our decisions by plenty of data. There has to be a reason for every trade. Otherwise, we're just running around like a chicken with their head cut off, and then all that does is lose money for you. So, all right, we will catch you next week. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.